First up, we are going to talk about the RBI and the decision of the Monetary Policy Committee, which has decided that they're going to leave repo rates unchanged this time around as well. And they've changed their stance. They've changed their stance to neutral. Although the result was widely accepted, it was something that was on expected lines as well. The change in stance has indicated that the Monetary Policy Committee may contemplate taking those rate cuts as the economic growth seems to be slowing down. Governor Shaktikanta Das has, on his part, highlighted that inflation may stay high in the near term. This prompting the MPC to maintain status quo this time around. But here's the rationale behind the MPC's change in stance amidst the high inflation and global triggers as well. This is what we got from the RBI Governor, Shaktikanta Das.
With lot of effort, the horse has been brought into the stable. We cannot, we have to be very careful before opening the gate of the stable, because there is every chance that the horse will again, the inflation horse will simply bolt again. You see the near-term outlook, if you see the statement, if you read the statement carefully, what we have said in the statement is that September it is going to be high. The data will be released on Monday. October also it is expected to remain high, maybe around 5% or so. And mainly on base effect factors as well as, uptick in certain components of food inflation. So in the near term, the inflation is remaining high, but thereafter there is moderation going into the third quarter. And also we have given the number for the, for the third, fourth, and also for the first quarter of next year. So we have now greater confidence that inflation is moderating, but we are acutely aware that there are significant risks. We have changed the stance at the moment because we see that growth and inflation, they are well poised. The balance is well poised. So the MPC considered it appropriate. The timing is appropriate to shift the stance to neutral.
So the RBI governor sounds pretty sanguine about the levels at which growth and inflation are placed against each other. Let's find out from an economist's perspective whether this matches what is on the landscape as far as the Indian economy is concerned. Mitali Nikore of Nikore Associates joining us now. Mitali, always a pleasure having you on the show. The RBI governor, we just heard him, sounding pretty assured that higher interest rates for the last year and a half, they haven't affected growth in India, notwithstanding the fall that we've seen in the Purchasing Managers Index, the PMI, last time. Would you agree that the balance between managing growth and inflation has been achieved, or do you think that food inflation still is that big concern that could derail the RBI's expectations?
Thanks a lot, Vikram Oza, for bringing me into this discussion. It's always a pleasure to talk to you, Vikram. It's, always an intellectual discussion that we have. So I think, just let's take a step back and start this story with the GDP data for Q1 FY25. If you remember, just a few months ago, we were discussing that we saw a GDP figure of 6.7%. coming for the first quarter of FY25, that is the April to June quarter of 2024 of this year, and this was a 15-month low, for India. It was almost a 3-4 quarter low, and this is a number that we have not seen for a while, right? The fact that we're seeing the Q1 FY25 figure being so low. So this was the first, I would say, trigger towards this neutral policy stance. And the second trigger towards a neutral policy stance is, the number on inflation, because at the end of the day, India is a country where we have to balance, much more than even the US, when we've seen that with the Fed decision, of course, how they've done it. But India is a country where inflation hits the common person immediately, because food inflation is often the first sort of trigger towards the overall inflation increasing. And that's why the RBI has to be so very careful about managing inflation and why he's so worried about this horse and managing his stable. So I think that's why.
Yes, but if sticky food inflation, Mitali, is going to keep the RBI from a rate cut, that's definitely going to have an impact. It's going to have an impact on the markets. And if the rate cutting cycle doesn't get sparked off at the end of the year, How do you think that's going to play out on the economy as a whole?
So I think, Vikram, very honestly, a rate cut is going to happen. Like in the next, in the next 1 quarter or second, 2 quarters, we should keep our eyes and expectations towards a rate cut, because we've seen that, the US Fed has also made a rate cut, and they have sort of come to that conclusion based on the inflation data and growth data, and the jobs numbers are also doing well. At this time, if we don't have a rate cut, we'll start to see a lot of capital flowing, away from the Indian economy towards the US economy, where the growth rates are, starting to increase. So, in order to maintain that continued interest in the growth story of India, we will have to have, a movement towards a rate cut. However, I don't expect the RBI rate cuts to be very, very bullish the way the US Fed rate cuts have been, where we saw almost a 0.5 basis point rate cut in one go. In the last 10 decision meetings, the RBI has kept, the repo rate unchanged. And today, for the first time, they've changed their stance to neutral, signaling that they are watching the data on employment, on growth, and on inflation. And between the three of those, whichever needs most attention in the next quarter, that's where the decision is going to go.
But of course, from the RBI side, of course, there can't be too much of an indication, but there is no clarity on the timing of a rate cut. But like you're mentioning, the change of stance from withdrawal of accommodation, which of course is essentially holding back money supply in the economy, now that stance has changed to neutral, which gives the RBI that much more flexibility in adjusting policy rates, looking at the situation on the ground. That perhaps is more indicative of a rate cut next time in December. And if it does, then what do you expect to be the pace and the quantum of rate cuts in this monetary cycle? Because it's going to be an important piece. Also, when you consider the synchronicity with other central banks like the Fed.
Exactly, Vikram. So I think that's what makes it very interesting, because I do expect it to be a more muted approach if they do take it. And I do expect it to be an approach which really balances, the inflationary expectations with the government spending, with the amount of, accommodation they have to make for inflation. But I think what is very critical for the RBI at this point in time is to try and ease that monetary pressure on the economy, because we are seeing a lot of construction activity, a lot of activity in the real estate sector, a lot of infrastructure projects where the borrowing costs are starting to creep up, and inflation is also hurting the consumer on one side, but that inflation has been tamed to a great extent. And also the months, right? The months in which they are planning this. The monsoon months are the ones which are a little bit of a trouble for RBI in terms of inflation. And that's what we're seeing when we look at the data for the, especially the seasonality in the inflation. When we start to see the monsoon months, that's a problem, because of the rains, a lot of, crop failures are taking place. A lot of droughts are taking place in the heat, in the summer months. However, in the winter months, it's a little bit better. I'm not saying that there are no impacts of climate change in the winter months, but the impact on agriculture is more muted, and therefore we do find that food inflation and the logistics chain works a little bit better in the winter months.
Well, just talking about GDP, since you were alluding to that as well, as far as agricultural output is concerned, on the back of a good monsoon, the expectation is that we will do well on food inflation as well. The RBI, of course, slashing that estimate for GDP for the second quarter to 7%. Just listen in to what the RBI governor said about the GDP scenario.
Real GDP growth for 24-25 is projected at 7.2%. with Q2 at 7%, Q3 at 7.4%, and Q4 7.4%. Real GDP growth for Q1 of next financial year, that is 25-26, is projected at 7.3%. The risks are evenly balanced.
The RBI governor says that the risks are evenly balanced when you look at the outlook for GDP. He also spoke about stability in consumption and in investments, that good monsoons having helped agricultural output, services sector doing well, private capex picking up, and government expenditure is holding up as well. So does that in a sense assure us that there will be further growth despite the global risks? Are indications favoring that thought? Mitali.
So, Vikram, I think, it's a very interesting time in economic history. As a student of economics, I can say this. Because the kind of global uncertainty that India is surrounded by today is quite unprecedented. I mean, we have, certain, skirmishes and warlike situations coming up in different parts of the world. And of course, disturbances in the Middle East, which at any point can, even flare up. And that creates some uncertainty around our imports of oil, and that has a direct impact on inflation. So I think that's the first risk we face. And then on the other side, we have risks of domestic recovery. Even today, the fact that COVID was such a big economic shock to the system. Even now, we have people, in certain income brackets who are still reeling from those impacts. And then we have the massive task of employment generation. And despite all of this, despite these risks, we see a resilient number of 7%. Yes, this is lower than the 8% growth rate that, India posted in 2023. But with the global economy and global consumer sentiment being muted,
Yeah.
India has still posted a growth rate of 7% or over 7%, which is higher than all economies pretty much, and definitely all emerging economies by a mile.
So this would be...
I think...
Yes, the outlook sounds very positive at this stage, especially in contrast to what we are seeing elsewhere in the world. But of course, the American economy looks strong, notwithstanding what we are seeing in the Chinese markets. After that surge, we've seen this big slide come through as well, even as the metrics haven't held up despite the stimulus measures. But that's the topic for another discussion. Mitali Nikore, always a pleasure having you on the show. Thanks indeed for joining us again. Meanwhile,